It is November 10th. This is the video log that takes 30,000 to a million. And after I take you through the account, I want to discuss a few things that have been on my mind. One, how a stock analysis fits into the overall market picture, how it fits in, and whether it's a good move to even engage in action or not. I don't know if I'll get to all these topics, but two, my newfound respect for financial professionals. And three, again, is the thought that when something is brought out to the table, meaning when discussed in financial channels or the media, or has been exercised in such a fashion that the broader market becomes aware of it, it now becomes priced into the market and ceases to function. I'm sitting currently at 150, I wish, 125,750. And I was much higher than this just earlier today. It will not show it because the clock has ticked 12 and I have not turned into a pumpkin yet. But as you can see here, earlier in the day, my account hit 129,117. Then there followed a very swift correction down $4,000 nearly, mainly led by Apple. My Apple positions reversed about $4,000 altogether, the options plus the equity position. I'm going to scroll quickly through these so you can pause your video player at any moment in order to figure out exactly what my strike price is, whether it's a put or a call, the expiration date of the contract, how many contracts, whether it's a sell or a put. With this information, you'll gather anything that you might need about my positions. On the right, you can see the daily change in value of these contracts, whether I'm erasing liability or adding more. These are the equity positions here. Again, you can pause the video player any moment. You can see the ticker symbol, the number of shares. That should tell you all the information you might need about my position. We'll not discuss, I guess, the entry points and all that because, well, you might see it in the account tab. But on the right here, you can see the daily change. So many of the positions had huge gains today, positions that are held for a while and been waiting for this rebound. But some of my core positions like Apple, Wheaton Precious Metals are down. My other account with a lot of gold miners and silver miners is just getting crushed today. But on the flip side, it had a really good day last week. So it kind of reversed. Some of the moves here were absolutely astonishing. For example, SBRA up $540. Then we have Energy Transfer up $400 almost. Royal Dutch Shell over $1,000. Schlumberger $975, almost $1,000. Many of these positions moved a ton. The shame of it all is that the majority of these moves are already pre-sold through call option contracts, which will not be closing. So they will expire and the positions will close. Things that are not covered by contracts are the emerging market funds, also Visa, Energy Transfer, thankfully. Some of Cameco is still not pre-sold. The Russian market, so those gains are legit, and realty income. So next, the account tab. You can see here, if you're interested, total return by here's the equity. So I hold mostly Apple, PCY, which is emerging market bonds, realty income, and dividend emerging market fund. So those alone comprise like a really big portion of my account, these four. And then Shell. The good news is that my 5 biggest positions are positive, so that's nice. And then the 6th one is almost flat. 7's positive and 8's positive. The 9th one though, energy transfer, is dragging up and making up for a lot of these gains. I'm down $1,200. Here's the account sorted by total return. So you can see this here. Going back to the account, if you're interested in the week's performance, this is what it looks like. 1 month plus 0.2%. 3 months almost 8%. 1 year I'm sitting at 48.34%. I'm expecting a lot of these options to roll off on the November 20th. So I will be re-rolling many of these, and I can't wait for that day so I can go shopping. It's kind of fun for me. Alright, that's the account. So next I'm going to cover some of my topics that I want to talk about. So first, analyzing company. What I've been thinking about today is that figures are only half the picture. Really, it's like figuring out what the puzzle looks like, but then as an investor, you need to have just as much knowledge about the rest of the landscape of that company lies in order to put it in the right place and know whether it's a good investment or not. So I've been trying to think about future investments in this type of way. So for example, let's say I analyze a company, it's a pharmaceutical company, and it's had 4 or 5, losing quarters in a row. And of course, to many investors, that's just not going to work. However, pharmaceutical companies are weird because they may be losing money in research. They spend a ton of money on research, billions of dollars in research. And then at one point, one of their drugs gets approved, and now they can sell it for a very high price on the market. They can sell ads, they can plug it into doctors, and they can recommend it. And now they have their little machine going, and they could be making up a lot of that revenue once the drug is FDA approved after 2 or 3 or however many rounds they need of testing and whatnot. And then because of this rigorous process, these companies, they tend to be given almost a monopoly on this kind of treatment. And so it could be very lucrative for the company. So the money eventually might come back to the investor. But you don't know that if you're just looking at figures, right? You have to know something about the business. Or if you're looking at a cyclical business like silver miners, for example, something I know a little bit more about than pharmaceuticals. I don't know much about pharmaceuticals. I just thought I'd give something different as an example than mining stock. But if you are betting on a research stock like that, and you see 4, 5, 10 losing quarters in a row, you think, wow, I mean, this company is going down to the dumps. Why would anybody keep money in here? Why isn't this company zero by now? Well, perhaps you may know that silver mining is a very cyclical business, and the silver price tends to jump up to really high numbers once every 5-10 years. And it sometimes catches commodity bull runs or the tail end of them. It makes a very dramatic appearance. And so what happens is, for a few quarters in a row, this silver company will bring in an enormous amount of money. And if you haven't already invested in the company, you will be front ran by the people who already know what's going on. So the stock price might rise, 5, 10, 20, 30 times. And you could get a 10-bagger, it's called, right? Something that rises 10 times its original price. It could be a very lucrative opportunity. But if you don't know how these cyclical stocks work, then you would miss that opportunity. So I think it's very important to know not just what the financials of the company is, not just about its management, not just about the way it runs its business, but also how it fits into the overall picture or puzzle, if you will, of the global economy. What commodity is it tied to? How does that commodity act and why? What kind of changes are there going to be globally or nationally when it comes to this type of commodity? So there's a lot of analysis that goes in outside of the figures that are displayed in the financial statements of a company. So I think both are important. So to reiterate, or to just repeat my analogy here, I think of the financial statements as the puzzle piece, and the environment that it lays in as the actual puzzle. And you got to try to figure out if the piece fits. And if it does, pull the trigger. Go long, right? Buy a call or buy the security, and that's your investment. Just make sure that if you are doing a cyclical stock, you have an exit point of some sort or a plan to get out of the position, because research companies do fall. If it's not a cyclical stock and you expect it to have growth year after year after year after year until it finally reaches total market saturation, then that's your plan. Maybe you don't have an exit point. Perhaps you plan on holding a stock forever, like Coca-Cola or something, or Apple, where you don't anticipate this company in the next 30 years to go under or lose market share because of the way they've positioned themselves in a specific market. And lastly, I want to talk about my newfound respect for financial professionals. So I watch this show every once in a while. You might want to check it out. It's probably one of my favorites. It's called The Market Huddle. And I listen to it quite a bit. And sometimes they have a good guest. They spend maybe 10 minutes or something going over their background, which is mildly interesting. But then they get to the good stuff, and the guest spills their jewels, for lack of a better term, their wisdom, their knowledge onto the listeners like myself. And I gotta tell you, there's some good stuff there. Today I listened to this guy, I forget what his name was. I think the last name was Green. And he managed money at some Wall Street firm. But he described some of the operations that go into the large scale, markets machinery, and I had trouble just following some of it. I know all the terminology he was using, right? I know what RMBS is. I know what long vol is and short vol, and all the triple leverage ETFs that are involved in some of the schemes that he was talking about. And I know what slippage is, and I know what all these terms that he was using. I actually knew what they meant. But the problem is that the way they fit together, I had to try to process that in my brain and try to imagine the structure that he was talking about. And it got so complicated, I had to listen to it like 2 or 3 times in order to imagine what he was saying. And he was said it with such ease, and he had the numbers already, or his answers already kind of prepared and ready to go, like he's been talking about it for a million times already. So it gave the impression to me that he was speaking from a very deep point of experience. Now, one of the wisdoms that he mentioned that I totally agree with 100% and have found in my other past life in athletics is that whether you got lucky or not when you succeed at something is of utmost importance. Like, it's really important whether you got lucky or you meant to do it. Yeah? So let's say if you grab the dart and you spin around 360 degrees over and over again, and you let go of the dart and you hit a bullseye, right? Are you really a skilled dart player? No. Yeah, or let's say you close your eyes and you roll the bowling ball down the alley and you end up getting a strike. You're not a skilled bowling player. You just got lucky. Yeah, but it's indistinguishable by looking at the result. It's indistinguishable between having skill for that one round, right, or getting lucky. And a lot of people in the financial industry apparently, well, they eventually meet, some kind of a disastrous outcome, but there are many that just get lucky on the timing of a few things and buy and sell things for the wrong reason, but so they look like geniuses for a certain period of time, but eventually come out to be not as skilled as once thought. And unfortunately, since it's such a two-dimensional playing field, the financial world, it is not easy to figure out which is which. You need a lot of time to go by before you figure out skill versus luck. So that's kind of been on my mind for the last few days. And I haven't made a video in a while. It's been about a week, and hopefully this makes up for it a little bit. So I've updated you in the account, and I've talked about these topics that are on my mind. And I don't know, what's on your mind when you're browsing through these stocks and what's going on today? It was kind of a crazy day, very up and down. I don't know what to make of it. I really don't. Usually volatile days like this signify a change in trend. So what the new trend will be is going to be very interesting. But some of the stocks that are, the anti-COVID or anti-pandemic trade have completely flipped, like Cinemark, AMC, and a lot of the oil stocks and all that stuff. They have totally regained some value there. Some of them 100%, 50%. It's been very uproaring, kind of a rally for the deep value sector of the Russell 2000, right? But what do you make of today? I mean, I don't know. I don't know what to think about it. We'll see. I guess wait and see. In the meantime, I'm just going to sell options and try to make money off of that. I mean, that's the best that I can do, as always. I know that I'm not smart enough to try to predict some of these prices, so I'm better off just sticking to my guns, right? Who am I to say that these aren't the right prices or that they are the right prices? I just got to play with what I got. All right, I'm going to leave it off right there. Hopefully you're all making a lot more money than I am. Seems like I'm finally starting to make a little bit in the last few weeks. So with that said, peace out.